You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a rockin' show. Yes, it's time for the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, a host of programs for you guys to check out. So if you're just mainlining the option block, we love you, we appreciate you, keep doing what you're doing, but maybe consider upgrading to the full network feed, the full kit and caboodle, and get all of the shows up to somewhere around north of a dozen shows you can fill your options time with. And of course, wherever you listen, if it's an iTunes or one of those other platforms, if you feel compelled to leave a review, glowing or maybe a slam against the meatball, whatever you prefer, head on over there. Feel free to do so. And of course, we have a nice little bonus for you hardcores out there. You can join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers. Yes, you can grab the live stream. So for you guys who say, man, I wish the show was instantaneous, there you go. We got you covered. You can tune in and get it in your ear holes the second it goes live. And of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom, all that goodness. We do, believe it or not, we do actually like to hear from you guys. And joining me on the old program today, let's go in reverse order. Let's start out in the infamous pool house, where we are joined. I think we're still joined by video, because I can see his head popping around there, by none other than the Tubinator himself, back for a repeat appearance on the old option block program, Mr. Matt Benson, a.k.a. Tubby, a.k.a. the options man about town. Quite literally, I just saw him the other night downtown, listeners, so he is the man about town. Mr. Tubby, welcome back to the program. How go things from the pool house?
And they go hot. It's very, very hot out.
Yeah, I hear you. It's pretty warm here in the studio as well. We have to kill all the fans and everything when we're doing the show. So all this hot air that I shoot out sometimes warms things up very nicely. So I feel your pain. We're not outside, but we're still pretty hot here. And also joining us, perhaps in the same vicinity, I don't know, or maybe he's close to the studio here. We'll find out. Is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. G, that's your other cohort. Mr. S, welcome back to the show. And where the heck are you today?
I'm coming to you live from Orland Family Dental in beautiful Riverside, Illinois, while my kid gets a tooth pulled.
Oh,
which I'm currently wearing around my neck now. In
that sounds lovely.
Cute little plasticky tooth thing.
That sounds lovely and fun for all involved. Hopefully, the little guy didn't have too hard of an experience. I had one of those once myself. Not too fun, so hopefully it went good for him. And last but not least, I don't know where the heck this guy is. Usually, he's safely ensconced in St. Charles, or sometimes he's out hither and yon these days in the mobile RCM satellite office. So we are joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back. And where the heck are you today?
Often imitated, never duplicated. Beautiful, lovely, sunny, scenic St. Charles, Illinois, broadcasting live on a 90-degree day in mid-September.
We got to do a live show from Skippy's Gyros and Lemonade. Think we can make that happen, sir?
We can try.
That'll get us on the wall for sure. If nothing else will, in that very rigorous criteria to be on the wall in Skippy's Gyros and Lemonade over there in scenic St. Charles, that will do it if nothing else. All right, with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was trading, what was moving, what was shaking. A bit of a weird one on the old tape today. Most of the major indices finishing the day off a bit on the day, off about 1/3 of a percentage point or so in the S&P. Similar distance, a little bit less in the Dow, and a little over 0.5% actually out there in the tech-heavy NASDAQ. So kind of a pick your poison day, but all of them ending the day down. If they're spending a lot of the day kind of mixed, trying to figure things out. And of course, all this kind of indecision led to, until the end of the day, VIX cash actually shedding a lot of its juice, this is actually looking pretty good for my crystal ball prediction as of, I think I picked somewhere 9.8 or 9.85. And today, yes, we are back in the single digits, closing today right about 982. So right in between the uprights there for my crystal ball. So if I could just put my freeze chip in, please. Let's just freeze it right here. And then perfect. I get one more day out of it. And then perfect between the uprights hit. We'll see how long that lasts. The day is an eternity out there in the vol space. Of course, that's after it dipped to an intraday low of about, and actually a multi-year low of about 9.54. I think that goes back to the early 90s since we saw levels like that, listeners. So pretty crazy stuff out there in good old VIX land. So a lot to keep our eyes on. Other than that, it was a relatively, overall volume-wise, a relatively quiet day. We do have a few names popping off in the near term, including coming up next week. We got BlackBerry, so there are still a few names lurking on the horizon from earnings perspective, but most of that pretty much in the rear view mirror. So let's kick things off. Let's start in that scenic, tranquil spot known as St. Charles, perhaps even if we're fortunate, from Skippy's Gyros and Lemonade someday, where Uncle Mike is keeping an eye on all this stuff. What caught your eye in today's activity, sir?
Well, a big thing that caught my eye right now that I'm looking at just over the last few days is the 9 VIX, which I'm looking forward to hearing the option pit and Tubby's perspective on that one. So, I mean, yeah, that's pretty insane how low we are right now, considering that we have about 35 different hurricanes, it feels like, threats of nuclear war from North Korea. We have a lot of things going on, but yet the market still just doesn't care. I guess just maybe it shows that we have a lot of millennials trading the VIX, apparently. Maybe that's the way it goes. But yeah, looking at that, we had a little bit of a down day today in the SPX, down 7 points. One of the brighter spots on the day, and I don't know if it's necessarily a huge bright spot, but it's kind of one that has held its numbers, and that would be XLF, the financials, with the Fed saying that they are looking to at least pause for the time being. I mean, we can debate over what the overall outcome is going to be on that, but with that, it appears that with the Fed at least pausing, apparently financials must have liked that for whatever reason. I know we've talked about on the show before how rising interest rates could help financial firms just because they can, well, quite honestly, charge higher interest rates on a lot of things. But that's one thing that's kind of catching my eye right now. The other things that are kind of going on in the marketplace right now, apparently the market doesn't like Apple right now. It looks like there's some issues with the iPhone 10 in terms of shipping and that type of thing. So Apple has fallen out of the favor with the market for the time being, but don't worry, for all of you Apple zealots out there, I'm sure you can view this as a great buying opportunity. But that is another thing that is down on the day. In a lot of cases, you could say that probably dragged the technology sector down in a lot of ways. And the other thing is that with the relative, now that we know what's going to happen, or not know what's going to happen, but now that it appears that the worst news or the worst events are over, it appears, you never know, with the hurricanes, gold and silver have pulled back a little bit. So it'll be interesting to see if investors view this as a buying opportunity and really run the bid up on that. So I think there's a lot going on in a market where really nothing is going on, if that makes any sense.
Yeah, I don't know if you got the memo, Uncle Mike, but we hit 9.54 in VIX cash. So apparently all is behind us. All worry is past tense. We can all sleep easy at night. Did you not get the memo today, sir?
Everything is fine. I guess, you know what I think it is? All the VIX traders must be in St. Charles for these last few months. That's why I think it is.
Yeah, they taste.
It's not even VIX. It's all the SPX overwriting that is killing VIX. I mean, VIX futures have been, relative to VIX futures have been, and VIX options have been surprisingly logical. It's been FINL puts that have just been ridiculously destroyed. Just saying.
Yeah, Mark, sounds like your connection just dropped off quite a bit. You're very faint, so we'll see if we can boost you up there. I'm sure the dental office not exactly rife with connection opportunities. That said, Mr. Tubby, I know Mike just mentioned Apple, and you've been pretty active on the old Twitters of late. By the way, follow him if you're not doing it. Sox fan Matt B. Check him out over there if you are so inclined. You want to get some of his pearls of wisdom throughout the week. Tweeting a lot about Apple. He's saying people trading Apple like it's a new biotech with a new phase coming, but it's just a phone. So have you been slinging some Apple, and what else has been catching your eye out there these days, sir?
Apple, I definitely was a buyer this morning, adding to a position, a Jan call position. I don't get it. You know, people like to dump these things, but this stock's down, 8 or 9% since its announcement last week about the new phones. We've always kind of questioned Apple in the past with their timing of getting computers out, you know, at the September dates as opposed to getting them out in August.
They've got to
buy it for school. But you got to think that the iPhone for Christmas is going to be one of the biggest Christmas gifts for anybody. So, or holiday gift, I think we're supposed to say these days. So I'm a big fan of Apple here. I'm definitely a buyer. On the VIX front, you know, I kind of have to go back to a theory of mine that I really think these weekly options are depressing the way you'll see volatility move. And Mark Sebastian obviously is much stronger in the VIX, but when you start, you know, everyone's long these upside calls, but they're short positions. They're short-term positions against it, so their risk is pretty mitigated. Oh, and here comes Mark Sebastian now in the pool house.
Hey, how are you?
I was talking about what you were mentioning with the SPX and all these mini strikes. I think are really depressing the volatility.
Well, and you know, there was a piece out that said, you know, there are so many of these mini events that it takes away a lot of the systemic events. Everything gets priced in right away, and then there is kind of this weird thing where, you know, you know what? VIX futures or VIX itself is low, but it's not like the VIX futures are that cheap. Yes, 1230 is historically low, but think about that relative to, you know, the cash index. The cash index has really just been pummeled by all of these weeklies, all of these different areas where you can set up trades. It's all SPX and SPY, I feel like, that has really destroyed volatility more so than, you know, VIX futures themselves and VIX traders. It's really SPX funds that are SPX that's doing this to VIX.
It's like an abused spouse. It just does it. SPX doing it to VIX over and over. Well, yeah, clearly anyone who looked at it for more than 2 seconds today realized something had to be up. This kind of drubbing with naught else really happening out there. Kind of a little bit bizarre. I think we'll probably, if you're interested in that, listeners, of course, tune in to Vol Views tomorrow. We get all sorts of knee deep into that sort of fun stuff. If you're hardcore for the VIX futures term structure, we got you covered on Vol Views tomorrow, noon Central, 1 p.m. Eastern, for those of you who like the live stuff. Speaking of things you guys like, you guys have been chiming in a lot on the whole Equifax thing. There's been a lot of Sturm and Drang over the past week or so. It looks like Bloomberg continuing to feed the fire this week. We mentioned about these guys potentially with some well-timed options trades. I'll get to your thoughts on that in a little bit. You guys have been chiming in on your own thoughts on our poll. But of course, Bloomberg kind of picking the ball up and running with it this week, doing a little bit of what we do here on the old Odd Block every day, which is, of course, doing some analysis of the old trades between the bid-offer spread, talking to our friend, the flow master there over there, Mr. Henry Schwartz, to kind of parse what was going on. Because we highlighted one particular trade, but others have highlighted the notion that there was kind of a bit of a surge in put activity out there ahead of the big Equifax report. Of course, we all know if you listen to this show, just because puts trade doesn't mean anything. You got got to really dig into what the heck was going on. Were they buying? Were they selling? What the hell were they actually up to? And of course, the first blush, everyone said people were buying. Then, of course, as they dug a little bit in, they talked to our friend the Flowmaster. They saw that actually these puts were pretty much hitting the bid or pretty close to it. In which case, a little bit different than people may have thought on the initial blush. I think it was, Business Insider came out first and said, puts traded, and they could have made $10 million on all these trades if it worked out. Well, when you dig a little bit in, that's where the devil meets the details in the options world. You dig a little bit, you realize, actually, probably they're actually kind of wearing these bad boys. So, interesting stuff. I think there was a SEP 135 puts that were traded about 2,500 times. That got the most attention, the most activity. When you start digging in, you realize they were actually hitting the bid for around 70 and 75 cents. So a lot different turnout than perhaps some people may have thought. Speaking of which, what your thoughts were? We asked you guys earlier in this week. We said, hey, there was, in addition to this well-timed quote-unquote put activity, there was actually an exec who cashed out some of his call options to buy the stock, obviously, then immediately dumped it, doing it to the tune of about nearly $600,000 worth of stock. Since he did that, the stock's off about 35%. What do you guys think? You think it's well-timed? Is he just lucky, or is it plain old illegal? So far, 73% of you guys saying our friends on the illegal tip acting on inside info. 11% saying he's got very lucky. 9% saying I'm too busy freezing my account to really pay attention to this. I feel your pain there. 7% saying he's a genius. So interesting stuff. I don't know. Mr. Tubby, do you miss the old days of weirdly timed trades and prints and having to deal with all this fun stuff? Or are you happy all that's behind you now?
I'm happy most of it's behind me. I do miss the days of the active options market, but it doesn't seem that I've missed a whole lot of that in the last 3 months. Something like this, these were always fun when you come across these. We've seen them in the past in the Wayback Machine with Denadron.
Din.
What was our favorite stock out in the Houston?
Enron.
Enron. When you see these things, and all of a sudden, the next day or a week later, the stock's down 40%. It was always kind of interesting, and you'd kind of see if you could follow up if anyone ever did get busted for these trades or not. This guy being an insider, I'm going to guess he might be a little bit of trouble.
I think at a minimum, it might be still some disgorgement because, let's just be honest here. Even if it was just planned, when he learned about all this stuff planned for financial planning purposes, when he learned about all this stuff, the smart guy probably says, you know what, why don't we hold off till after my announcement? And then the article, the 2,700 puts they changed hands on August 21st. It was a big order, but still, it was September. I guess they didn't have October. They didn't have weeklies at the time. So they've just added weeklies in Equifax now. But, I guess it was well-timed, but, was it done untied? Mark, I don't remember.
Yeah, that's the consensus. Everyone who's dug into this so far haven't seen a stock leg going up with this. So it does appear to be straight up as you'd expect. Good old Valentine paper.
Probably not a whole lot of stock.
Certainly well timed. Let's say put that at a minimum. Although he had to wait a few weeks for him.
Well, I guess the interesting thing with the stock seller would be in the 11 and 9% of well-timed camp. Is this something he's done regularly? Is this the only time he's sold shares?
Yeah, does he have access to this type of stuff?
Or has he done it 4 times in the last year, every 3 months? And if that's the case, then you got to go, it's well-timed.
Have there been other hedges is basically, had there been anything close to this size done in the last couple of years?
Yeah, apparently the answer on all that is no. It's not part of a recurring pattern. He hasn't done this before, so it does seem like it has the whiff of shall we say, dubious paper. But there's a bunch of people investigating this. They want to get a perp walk on this. They want to get it, of course, due to the whole breach. But I don't know if they're going to get that. So these 3 guys with their well-timed paper may have just raised their hands and said, hey, we volunteer for that perp walk on a completely unrelated topic, which is insider trading. But still, as long as they get somebody in cuffs and testifying before, I think the Congress there, I think they'll be happy. Speaking of voting and things like that, so we asked you guys right now, we like doing a little of these live polls on the Thursday show. It's Uncle Mike Day, Strategy Block. It's coming up in about, 15, 20 minutes or so. So get out there. We just posted a poll for you. What do you want Uncle Mike to talk about today? We gave you 4 choices. One of them is easy for me to say, hedging a concentrated stock position. Number 2 would be hedging your entire portfolio. Again, with puts, can't really fit all that in there, kind of implied what we mean there. Number 3, selling premium with a 9 VIX. That seemed like it's off to an early lead. Number 4, SPX skew versus single name / commodity skew. So if you haven't voted, get in there now, make your voices heard, and we'll see what Uncle Mike gets up to in about 15, 20 minutes. Meanwhile, though, I know what we're up to. It's time to kick off the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for the funky portion of the show. It's time for the Odd Block, the portion where we break down the weird, the wild, the whimsical, the outrageous paper to break away from the W's there. That's lighting up our collective tape. Like I mentioned, a little bit of a quieter day today, so some of the big trades, quote unquote, were a little bit smaller than some of the other days that we've seen, but still interesting stuff. It's not always the size money that makes it onto our radar every week. Let's kick things off. Things that are usually on our radar, because you guys are always asking us about them, are these crazy catastrophe puts out here in Tesla. A quiet day out there as well. Only 18 hitting the tape, so not 300, 400, 500, whatever. Kind of a quiet day for people looking to hedge that important key man policy over there on Musk there. 28,960 on the tape as of today's action. A whopping 10 more than on Monday. So things perhaps a little bit quiet the last few days in the Tesla catastrophe land. That said, 26 of the par puts did trade in Jan 2019. So these little weird strikes continue to trade and continue to dominate the OI in a name that's otherwise fairly active. So weird stuff. Read into it what you will. I know you will, and you guys already have. Speaking of which, we got an F day here in the old Odd Block. 3 names, all starting with F. Didn't work out, wasn't planned that way, kind of just worked out that way. So dial into that portion of the alphabet for today's. Kicking things off with a funky trade. I don't know if it's a fly or a stupid 3-legged weirdo, whatever you want to call this bad boy, in FINL. This is Finish Line Inc. If you're not familiar with this name, they're an athletic retailer. Surprise, surprise. This is the name that does pretty, actually decent paper for the Odd Block, nearly 4,000 contracts a day. Today doing a whopping 70,000, about 3.3 to 1 puts over calls. That's where pretty much all the action was, including a good chunk of it in this kind of funky 3-way we saw going up in the front month in October. By the way, it's the name that closed today. $9.22, off about a little over 2%. It's worth noting they have earnings tomorrow before the open. So today's paper is effectively earnings paper. If you wanted to get something off, you had to do it today to get it off. So we'll see how this plays out. Potentially, this had some bearing on the paper we saw today. Like we said, we saw pretty funky 3-way, including starting off the day with this OC 789 put 3-way. Call it what you will. Looks like all of them pretty much aggressively hitting the bid, or in one case on the 8 puts actually going up a little bit below it. So a little out of sequence there. Probably blasting out the 8 puts for 30 cents, the 7 puts for 15 cents, and the 9 puts for 65 cents, doing it 10,000 on the 9s, 10,000 on the 7s by 20 on the old 8s, so the old 1x2. Actually, as the day went on, the ratio got a little bit different. About 12,000 and change on the 7s and 9s, actually 15 on the 9s, 25 on the 8s, so a little bit off of a 2-to-1 ratio there. Also worth noting, this is opening paper on all the strikes. There's not a lot of open interest, with the exception of the 8s. There's about 15, nearly 16,000 contracts open on the old 8. So open in paper, aggressive size, funky ratios, 3-ways, all of them on or pretty near the bid, and all of them just a few hours before earnings. Let's go check out the year that has been out here. I don't think Finish Line Inc. has ever been on the Odd Block before, so a newcomer to the old Odd Block here on our F day. And this name is kind of, if you kind of guessed the trajectory of an athletics retailer over the past year, this name has pretty much followed that course. It's been a long, slow decline here for this name, trading as high as nearly $25 back in December of last year. Now it's down to almost a third of what that was. It got as low back in the doldrums of just about a month ago, back in late August. It got as low as actually hit $6, 6 and change, $6.90. So this thing has seen a rough road over the past year. Interesting paper lighting it up today, Mr. Meatball. Let's just call you guys the Pool House boys today because you're both in the pool house, Mr. Tubby and Mr. Meatball. Let's kick things off in our F block today. What do you guys make of this funky three-way, kind of funky put fly, call it what you will, or more like a stupid, actually, because it looks like all three of them kind of getting blasted.
Well, I mean, let's talk about how this line has done the last few months. It's been kind of an ugly picture. There are some people that think they might go out of business, or at minimum, they're going to have to merge with like Foot Locker or somebody like that. So ahead of earnings, with the stock having been awful, is this guy, it's definitely a strap it on type trade. Let's put it that way.
A strap it on type trade. Tubby, do you share that technical terminology there, sir?
I actually disagree. I think it's a butterfly. All these options were nickel wide. I'm guessing this guy bought a 20-cent butterfly, assuming the stock and the earnings are going to be lousy tomorrow. It's not going to zero. I thought I heard the other day, and I could be dead wrong on this, that they were looking for financing to go take them private. So maybe someone's thinking $8 is where this thing's going to be.
That does line up as a nice butterfly that they'd be paying, let's see, 50 cents for the butterfly?
20 cents. 80 cents versus 60. You collect the
80 cents versus, that's not bad. I mean, it's still a balls on you butterfly.
Oh, yeah, but
that would actually make the most sense, especially since they're all below bid. Maybe that's how they got the kind of centering price using it that way. Probably went up electronic would be my bet.
Tubby, good to see those math skills have not abandoned you yet there, sir, for your basic ratio math. But yeah, that's kind of the blush we got as well. It has all the feels, to use a technical term, of a fly, even though the prints are a little out of sequence. But as you know, Tubby, sometimes to put these bad boys up, you got to put things out a little bit funky to get all the prices to line up or to incentivize someone to take that other side. So yeah, earnings tomorrow, right around that near at the money strike, or actually a little bit out now with the eights, but still interesting stuff. I'm going to lean fly as well. We shall see. We shall see tomorrow how all of this, if our friend here prevails. Meanwhile, in continuing in our F-themed, F-oriented odd block, let's go out to Fez. This is the name we haven't talked about in a while. This is the SPDR Euro Stoxx 50 ETF, ticker symbol FEZ, F-E-Z, closing today pretty much unched $41.06 to be precise. This is the name that does a decent paper, about 5,000 contracts a day. Today, doing about 25,000, about 5x that. Pretty even, too, 1.5 to 1. That's because we saw two fairly sizable trades going up on both sides of the spectrum, the puts and the calls, with a little bit of time delay in between, which is kind of interesting. What we saw today was, again, that's why we like the odd block, all kinds of weird stuff. This time was the DEES 3740 put spread going up for, looks like 46 cents, 7,500 times. It's like paper lift in or close to on the offer on the 40 puts, selling out the 37 puts, so buying that spread for 46 cents. Worth noting, opening on both strikes, so no real size open interest there. Then interestingly enough, we did see another print come in 3 hours later. A lot of times we'll see, these collars or these bearish risk reversals call, which will go up. Usually they go up, at around the same time. If this was separate paper, that'd be kind of odd because this is the name that doesn't print a lot. So to see two huge trades go up like this in a similar time is kind of interesting. We also saw 10,000 of the Feb 43, so a little bit farther out, perhaps a bit of a time calendar / collar, if this was indeed the case, or / risk reversal, doing it 10,000 times, going up for 56 cents, also opening right kind of in the split in the uprights there in terms of spread. Open interest, only 5 contracts on these, so all clearly opening paper. It has a bit of a blush of a bit of a collar risk reversal. Only problem is they're doing it, if that is the case, they're doing it kind of the wrong way. Usually we see the calls going up a lot closer to home versus farther out than the puts, which is kind of what makes it a little bit weird and perhaps open to a little bit more interpretation out here. Let's see what's going on for the year that's been out here in good old Fez. It's been an interesting year. It was trading as low as like 31 and change back in December. And where we are right now, about 41, is pretty much the high for the year out here. So hovering near some lofty highs. Let's turn it over to the Pool House boys. Hopefully they're not making their noise, a.k.a. Pool House noise. What do you guys feel about these? Maybe Tubby, we'll start with you because this is more of an execution question than anything. Did you see a lot of these types of spreads going up such huge, I think it was about 3 hours between these two, that were still related, the customer kind of sitting on one? I mean, that'd be kind of an aggressive leg if that was the case. Or is this kind of something you saw a lot, or is this kind of weird for you too?
You see it sometimes, especially in European markets. You could, trade something and then trade a Japanese product or whatever, you're spreading things off. But I don't know about this one, but it's in the same stack. You're 30% higher than you were at the beginning of the year. At the end of the year, you've got, we have debt ceiling issues in the U.S. Maybe this is a play on Europe this way, that if we shut down our government, that the stock finally backs off. The calls do not look to me to be related.
No.
But also mid-market, if they were related, I'd almost guess they were sold, not bought, even though theoretical's lower.
Yeah, I mean, it doesn't look they weren't tied. The only interesting thing would be is if like the Dees trade was like maybe it was some weird stock replacement, or some of the taking the other side of that was looking to move vol around or something like that. So it maybe isn't the same. It might be related, but not the same customer.
Right.
It could be just a play on deltas. I don't know, but it's definitely they're likely somewhat related, but not completely.
I wouldn't be shocked if the counterparty was the same on both of the trades.
That tends to happen.
Customers putting them on, but the counterparty going, yeah, I'll buy those calls. I just, sold this put spread here, sold some stock with it, so maybe I'll buy these calls from you, even though it's above theoretical.
Yeah, the calls definitely have the blush of selling, which is kind of why our first vibe was, hey, perhaps a bit of a funky backwards collar, but for all the reasons you guys just pointed out, as well as the backwards nature of actually doing and making the calls out farther, it doesn't seem like it would be tied to each other. But again, the name doesn't do a lot of paper, does so much size in one day in a very similar type time frame. Tend to reason that something's up with one versus the other. I think the counterparty argument is a good one as well, because they gotta take some of this off as well. Let's move on to our final name here. If you guys have thoughts on these, hit us up. We do like to hear from you guys as we move on to our final name in our F-oriented, F-themed odd block. This is Fold. I do believe at least two of these, maybe two of these are pretty much newcomers, I believe, to the odd block. I think we have talked Fez before on the old show. Fold is Amicus Therapeutics, Inc., ticker symbol, like I mentioned, Fold, F-O-L-D, closing today, $15.78. Good day for them, up nearly 6% here on the day. It's the name that does about 3,700. All the names today all average about the same, about 4,000 contracts, and this one doing about 15,000 today. About 1.5 to 1 calls over puts, because once again, we see some funky paper on both sides, similar to what we saw there in Fez. This time, though, it was all constrained to 1 month, all out in April 2018. We saw, first off, a 2,500 lot of the April 11-14 put spread going up. Like I said, 2,500 times. Paper looks like lifting that offer for about $1.25 on that, buying the 14 puts, selling the 11 puts. Then coming in at the same time, this time no 3-hour time frame. Looks like also picking up a little bit of the 15 calls, or at the very least putting up a print near the offer on these bad boys, also for the same size, 2,500 times. So it could be a little bit of a strangle with a put kicker on the outside. For whatever reason, they felt the need, or they were less concerned about the downside, perhaps, want to give themselves some room to run on the upside, which this is biotech. That's usually where you see the big explosions. It is to the upside. Interesting stuff here. I don't see any earnings on the horizon for them. They just had them back on the 7th, so a little over a month ago, 7th of August. So no earnings there. But then with biotechs, as you know, earnings are just the beginning of the events that make them move. Looking back over the year that's been, this thing kind of traded as low as about 4.5 or so back in December of last year. Since then, it's kind of been on a nice upward trajectory, topping out where it is right now, nearly $16 after today's move. A good move to the upside. So interesting stuff. Maybe that's also why our friend here decided to go uncovered on the upside leg. If this is indeed a strangle, is that he sees the room to run on the upside. Last but not least, Pool House Boys. What say you guys about this this funky strangle with perhaps a put kicker?
Yeah, I mean that is what it is. It's a strangle where they sell the put to reduce the cost, and because they're kind of worried about everything falling apart. It's a nice trade. I get it. Probably my guess is this is in fact not my guess. I am almost certain this is around stop. I would guarantee it.
Well, and I'm almost certain it's got to revolve around a date of a release of the drug potentially, because otherwise there's no reason to go all the way out to April. That put spread, I checked this out. Something just flew at me. The put spread was pretty much around 1.25, 130 in November, January, and April. The only difference was if I'm buying the call, I could have bought a November call for, I think, like $2, or a January call for right around $3. So unless there's a release date that someone's looking for here, I personally don't like the trade. I would have done a January or even possibly November if he's just looking for an upside with a little bit of downside protection.
Yeah, the time frame is interesting. Again, these biotechs kind of roll to the beat of their own drummer. Earnings are one thing, but of course, FDA approvals, drug announcements, those types of things, trial announcements, those all kind of mix in. I wouldn't be surprised if you're right there, Mr. Tubster. Something is afoot in April, or perhaps our friend is wanting to give himself a little bit more time on the old calendar. And again, leaving the upside open. If he's got a bias, that's where it is. Hard to blame him with this thing going from 4 and change to nearly 16, nearly 4x in the span of about 6 to 8 months or so. Hard to fault him for leaving that upside open, even if you're not a big fan of all that premium buying over there. All right, with our F-themed odd block in the old proverbial docket, let's keep on rolling. Let's find out what you guys voted for. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Uncle Mike is waiting with bated breath, great anticipation for what it is you guys chose. We gave you guys 4 choices. Unfortunately, all you folks listening on the on-demand, we know a lot of you guys like to do the on-demand. The live is kind of just a fun bonus. Yeah, you're not going to have a chance to vote in this one. But so far, looks like we gave you 4 choices: hedging concentrated stock positions, hedging the entire portfolio, selling premium with a 9 VIX, or SPX skew versus single name / commodity skew. So far, 83% saying they want selling premium with a 9 VIX. Go figure. Only 17% saying they want the skew, and no love for the rest. So, Uncle Mike, there you go. There you go. That's what we got for that. Can you handle that topic, sir?
I can do. I think I can. I'll try to do my best with this.
All right, have at it, sir. The floor is yours.
All right, so selling premium in a 9 VIX market. There is I don't know, there used to be commercials that came out in the 80s on near beers, like I think it was O'Doul's and Sharps, and I think what it was is it's what beer drinkers drink when they're not drinking beer. And so, number one, me being the cynical one that I am, the first thing I thought, well, if they're not drinking beer, then they're technically not a beer drinker, but nonetheless, it is what it is. What can you do what do premium sellers do? What do premium sellers sell when they're not selling premium? Well, it is a challenging market to be selling premium in right now, no doubt about it. Now, with that, let's look at one school of thought on this. If the market's not moving and you're selling premium, but you're not getting as much premium for it, well, there's a reason for that. That's the market not moving. And if the market doesn't move, then in theory, doesn't that make it a greater opportunity for success because the market's not actually moving? No, you don't get as much premium, but the market isn't moving as much, so you have a greater chance of success. And so theoretically, you could make more money that way. That's one school of thought. To sum it up, if the VIX is at a low level or if premium is at a very low level, then a lot of times it'll stay that way for a while. And so, of course, the old trader's saying comes into play that selling premium in a low volatility market will continue to work, and it will work well until it doesn't, and then it won't work anymore. So that's one thing to think about when doing so, when you're actually selling premium on it. Now, another thing to think about when selling premium would be there's Mark's buddy, Jim Cramer, always says there's always a bull market out there somewhere, and I will work to find it for you. That's what he says at the end of his show a lot of times. And what I would say is that there's always some premium out there somewhere. And if you're a true premium seller and you want to sell some premium, there are names with which you can do it on even right now. Now, of course, the downside to that is that you're going to do it in some higher risk names than you probably would feel comfortable with typically when doing so. But when finding the right mix of something to do for selling premium, it's a chance that you have to take, so to speak. Now, the other thing that you can do when you have a lower volatility environment is you can go out at a further time frame. Let's say you normally like to sell 1 week out. Well, perhaps you can sell 2 weeks out and go to the similar strike price. Normally you're 1 month. If you're in an environment like we're in right now, perhaps you can go 2 months out. The reason that I say that would be, number one, you want to actually get the premium. And the other benefit of doing that is that oftentimes, if you are selling premium, I believe that you need to be active on things like this. I think that if you are selling premium, unless you're doing something like my silver collar that Longo makes fun of me for all the time, I think it's important that you're active in looking at this. For example, if let's say you're selling a covered call on underlying and the stock goes down, but you still like the stock, if the if the short call goes down to a certain level, my personal rule is when I can make 80% of the potential profit out, that's when I personally like to get out of it. Can't say I do that every time, but that's kind of the general rule that I like to usually come close to abiding by. I think you need to get out of it. And so even if you are getting less premium that you're taking in, you may have the opportunity to sell it more times. So for example, let's say normally you're looking at XYZ stock, and let's have XYZ stock trade at $75 per share. And you're normally selling the 80 call month in, month out. And sometimes it goes up past 80, you get called away, you sell the 80 put, get back into it, and you're just doing a wheel type of trade. Well, with that, let's say that you're doing this month by month, and now because premium's so low, you need to do it 2 months out. Well, you're still getting the same amount of premium, but if you have a limit order in to say, and let's say you're getting $1 for that call option. I'm just making up numbers, shooting from the hip, basically. If you're getting $1 for that call option, then what you can do is continue to put in the same limit order that you've always had, or I hope that you've always had, a GTC type of limit order to simply get out of that short call option when it was to go down to 20 cents. Now, I understand that the effective gamma is not going to be as great as it is at 2 months than it is at 1 month. However, what this can do for you is you can still, if you are getting into and getting out of short premium trades, you can still possibly sell this again and again and again like you would be in the past. Now, once again, it's probably not going to be as effective if all things are equal. Let's just say that premium is higher and markets move the exact same, then obviously you're better off in a higher volatility environment. I'm not denying that. But what I am saying is that if the market is wrong and the market's moving more than it should be, in theory, based upon the current volatility state, and by market I'm referring to any individual name, stocks, commodities, whatever, then you still have the ability to get in and out of it if you have an active stance. So takeaway from this so far is that if you are just a dyed-in-the-wool premium seller, and that's just what fits in with your trades, whether you sell verticals, whether you are a covered call seller, a put seller, whatever the case may be, you can still benefit from this, but to quote the Rock Lobster, you need to do stuff. And if you were doing stuff in the first place, yeah, this can be a little bit more challenging in this environment, but it's still a way with which you can go with your trading. No question about it. Second takeaway that I want to emphasize on this is that if you are screening for stocks that have higher premium, you may need to maybe loosen up, or not loosen up, but you may need to, instead of demanding X% on a monthly covered call or vertical or whatever you're looking for, you may need to get a little bit more liberal with it, but there will still be opportunities out there in some way, shape, or form. Now, the final one that I want to emphasize, or the final takeaway point that I want to emphasize on this, is that of a diagonal spread or a calendar spread. Now, if you are let's say you're bullish neutral, you're a covered call style trader, if that's the case, then right now it might not be a bad idea to perhaps replace the stock with a long call, sell a call against it. Now, by doing that and change the months. So let's say that instead of doing it as a traditional covered call, you can buy maybe a 6-month out long call in the money and sell near-term calls against it. Now, what does that do? That's a traditional diagonal spread or stock replacement strategy we've talked about on the show at least 100 times. But what you're actually doing when you do that is you're locking in low volatility 6 months out. What do I mean by that? Well, right now, let's say if you're a premium seller and you're very upset that the market is lower, and that volatility is lower, what you can actually do is you can do kind of a don't beat them, join them type of an attitude. If you can't beat them, join them type of an attitude. In that you buy a long call option several months out, then let's say that volatility goes higher. Well, in theory, the option goes higher. Now, I understand that if volatility goes higher, the call may go lower because of the inverse relationship and that type of thing. But let's just get theoretical here. Let's say that we are in a vacuum and volatility is the only factor that is working on this option. Time will stand still, row stays the same, markets don't move, no dividend plays, nothing else. If volatility goes higher, then the value of the option will go higher. Now, of course, there's other things to consider on that, like I just mentioned, but what I want to emphasize is that you're locking in the lower volatility for 6 months. Now, with that being said, let's say the market doesn't really move that much and that front month call expires worthless. All of a sudden, markets go down a little bit, but volatility just shoots up. I mean, there's just fear in the markets of North Korea, of anything that we mentioned on what we saw in the markets today, whatever the case may be, volatility goes higher. And so your long call is down in value a little bit, but the fact that you sold some premium, that made up for any loss in it, and the fact that volatility went way up, you're not really losing a lot on that long call. Here's where the true benefit comes into play. The following month, if you're looking to sell that same out-of-the-money call against it, volatility is now all of a sudden much higher. And you're going to get a lot more premium than what you had the month before. And by doing that, you've actually done something to try and benefit in a lower volatility market. So with that, those are 3 thoughts on what to do if you are a premium seller in a market like this, where the market, like a client of mine sent me, I think he actually is a listener of this show, but he was sending out a graphic to him and all of his trading buddies, make volatility great again. If you're in a make volatility great again environment, as we are now, then those are some things with which to consider. And that is the strategy block for today, first day of fall.
There you go. There you go. Well done. Good job thinking on your feet there, Mr. Uncle Mike. See, our listeners throw you a curveball, you run with it. Well, I know you're a football guy, but a little baseball appears to be in your veins as well. We got a few minutes here on the old show, so you can squeeze in a couple of the listeners. It's time for an abbreviated version of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to take the reins. Questions, comments, insights, pearls of wisdom. We welcome them all. Speaking of people who like Uncle Mike, we got Salman Azhar. I think he's written in the show before. He's listening live, obviously, saying he's a fan. He's a big fan of Uncle Mike. So there you go, Mr. Uncle Mike. You have one. That's it. It's your mom and this guy here. How's that feel? I guess he's.
Aw, that's nice.
At least one. There you go. Getting some live love over there. All right, we got. Let's see this one. These are some long ones. Let's do. Oh, speaking of that, Salman, he had a question. I didn't even see it before. He sent one in before. I guess we'll break our rules and give him a twofer. He says, "I've been selling out of the money debit diagonals during earnings on both the upside and the downside, essentially exploiting vega during the volatility crush. I lose some money at times, but the overall strategy has been great. I think he means to say, have I been lucky, or does this make sense?" Well, we're fans of taking advantage of volatility crushes here during earnings. We talked about that many times here on the show. Of course, a lot of the data is kind of split when it comes to earnings. There haven't been many studies, but those that do say you're pretty much kind of damned if you do, damned if you don't, if you're blasting out premium or buying premium when it comes to earnings straddles. It's kind of a bit of a rough road to hoe. And you don't really include a lot of details in terms of how you're structuring it. I'm guessing probably with weeklies, because that would be the tightest way to do it around an earnings event like that. But maybe you have a different thing. I don't know. Uncle Mike, he's a fan of yours. Do you have any insights into how this guy would structure this? Or do you have any thoughts in general about this guy's, what is he saying here? He's got out of the money debit diagonals during earnings on both the upside and the downside to exploit volatility crushes.
Yeah, I mean, I think it would depend on the time frame with it for the vol crushes. I know that just from years of doing playing earnings with Apple, and I wasn't really playing earnings. I was basically just hedging ginormous underlying positions and then just praying that it wouldn't screw up, basically. But no, on a serious note, I always found that more the near term was probably would get crushed a lot more than the longer term. And it depends on the name. It depends on the underlying. I would suggest that one of the important things of that is to really have a knowledge and have a feel for the underlying itself, because different underlyings will react differently for different cycles of earnings and how they've worked. So that would probably be the main thing that I would say on that.
Mark, I know you're probably less of a fan of this type of strategy, Mark, because I think you take a more dim view, I think, of trading specifically aggressively around earnings, because it is a bit of a binary event, a bit of a crapshoot, like we've said many times on vol views. There's not a lot of data, hard data to support really in either direction, because you can have those aberrant events that will blow you out either way. So I'm guessing maybe you're not a fan of this, or maybe you are.
I'm not. I don't like any earnings trade. I'll be honest. Trading ahead of earnings makes some sense, but trading into earnings. Remember, our friend Russell Rhodes basically pointed out that the only people making money on earnings are the market makers. It's not that the people that are buying are losing, the people that are selling are losing, and that's just the way it is. So I think that, I get what he's talking about, but I think that there are ways to not expose yourself that could probably be more efficient use of capital.
He does mention here he loses a little bit too, so he does mention it's not not a foolproof strategy. We got time for, I guess, one little quick one. Let's see if I can find a quick one here. This is Jedi Marcus. He wants to know about our what we were talking about before, our poll with EFX. He wants to know if the unusual activity we were talking about, was it after this executive knew about the actual breach, but before they disclosed it to the public, and also did he already have, this is what Tubby asked before, did he already have a planned auto exercise or diversification or selling plan in place? The answer appears to be to both is yes, after he knew about it, which they discovered, I believe, in January, or maybe March, but certainly a significant amount of time after that. But it did not appear to people who have dug into this so far. I have not been one of them. I'm relying on other sources for this one, so bear that in mind. But does not appear that he had any sort of regularly scheduled quarterly diversification plan or anything like that would make this make a heck of a lot of sense. Looks like he took some options, cashed them out, dumped the stock, got the hell out of Dodge before all of it hit the fan. All right, we got to keep on hitting it ourselves with our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Oh, here's a comment from More Money, More Problems, saying he only uses stock twits, but our poll on EFX got him into Twitter somehow. So there we go. I guess we're to blame for one more Twitterer out there in the Twitterverse. I apologize if that's the case. All right, moving on. This is, of course, our final segment where we tell you what we're watching for the rest of this week. As we all know, VIX is now single digits, so there's nothing really to worry about at all out there. We can all kind of rest our heads easy. Hurricanes be damned. North Korea be damned. Everything else be damned. Let's just get some sleep. That said, let's start with the Tubinator back in the pool house. What are you keeping an eye on for the rest of this week, sir?
Well, I will promise you it will not be my personal account. I am on the road with 5 local hoodlums to Louisville tomorrow for Bourbon and Beyond Music Festival. So we'll have Eddie Vedder and Steve Miller Band and 40 different distilleries that I'll be tasting and probably spitting like we were tasting wine. You know, you didn't want to swallow all those bourbons in one day. Yeah. I'm lying there. That's what I'm going to be looking at for the rest of the week.
Well, retirement sounds like it's treating you pretty well, sir. Slinging a little apple here, drinking bourbon, listening to good music. We all should enjoy retirement as you do. That said, your fellow compatriot in the pool house, I'm assuming you're not heading to Bourbon Palooza over there. What do you, in fact, you'll probably be on Volviews with us tomorrow. What are you keeping an eye on for the rest of this week, sir?
Actually, I was a little mad I wasn't invited, to be honest. But
I don't blame you. That sounds pretty fun. I like that. Bourbon and rock.
Yeah, no, that would have been, they would have needed a snow shovel to scoop me up off the ground. I'll tell you that at the top of the show, I talked about the cash future spread. Anytime that thing gets wide, the futures have been consistently right and the cash has been consistently wrong. I'm not saying that we're heading for some sort of major event, but I think vol's oversold. I would be a straddle buyer. That said, my fund is short of a ton of vega right now. But here's what I would say is I think as I look, the short time spread seems to make a lot of sense. Short vega, long gamma, in that vol is just so low. So we've got that. And I'm not sure. Do we have any other major world events coming up? I don't think so, right?
No, but you got 3 days with a crazy president in North Korea where we can't trade the market. So I'm not selling vol tomorrow morning.
Yeah, no, that's true. But I'm less than worried about. I think the North Korea thing is done. I think the issue is there's some shoe that's going to drop. I don't know what it is, but feels like we're set for another little mini trip to 13.5 and then right back to 9.
Rocket Man is never done, sir. He's always got something else up his sleeve. All right, last but not least, Mr. Uncle Mike, you're out there in the tranquil haven that is St. Charles. These global concerns just blow right over you in paradise on earth. So that said, what is on your radar for the rest of the week, sir?
Well, I'll tell you the exciting thing on my radar is the fact that we had a Fed announcement yesterday, and I think the market moved like 3 points or something right afterwards, and it's just becoming less and less of a big deal, so that's very exciting. Watching to see how Apple reacts to this little pullback that it had, watching the way silver reacts to this little pullback that it had, and seeing if we can hold 2,500 for the end of the week. We're technically pretty much totally flat on the week based on last Friday's close, and that's what we're watching, and seeing if the Bears can make it to 0-3 this weekend.
Yeah, right. If you think there's any way they're beating the Steelers,
they're actually on a 2-game winning streak against the Steelers.
Good luck.
All right. Speaking of luck, we're all going to need it because we're heading out of here. That's the end of our show. That music means we're done. We'll probably go for another hour here with all sorts of fun stuff. Maybe help with the whole listener question segment, like a whole show one day, and just go crazy and answer questions for an hour. So you guys clearly have a lot on your mind. We only get to scratch the surface here on these little abbreviated mail blocks. So maybe we'll do those one of these days. It'll be kind of fun. But before we go, one last time around the horn, see what our listeners, or I should say our all-star panelists are up to. We know what Tubby's up to. He's drinking bourbon and listening to music. That said, Mr. I almost called you Mr. Not the Rock Lobster, Mr. Meatball. I hear the little birdies tell me you may have something up your sleeve for next week. If so, what is it, sir?
Well, if you are a liker of the show and you want to, learn how to mock trade with me and Matt Benson, and maybe I'll pull Mark in to help. And 2, you want to listen to a live Option Block podcast. And 3, have drinks and hang out with us post Bourbon Fest. You got to check out the Professional Traders Summit next Wednesday, Thursday, and Friday. Get your butts to Chicago. It's a great way to support the show, and it's a great way to get an opportunity to really learn some awesome stuff. I just wrote up my presentation. I'm going to be doing directional trading in a low vol environment, which will be fun. And the titular Russell Rhodes will be doing something on weekly VIX trading.
The volatility man about the globe, Russell Rhodes. Since our last show, he was in Tel Aviv, then he was in London, then Tel Aviv, back to London, and now to Amsterdam. I don't know where the hell he's going to be tomorrow. I guess we'll find out on the show tomorrow. So stay tuned for that, and join us next week if you're going to be in Chicago. If you got Tubby there being the broker, that'll be fun for a little live mock trading. Some good stuff there. And last but not least, Mr. Uncle Mike, what is cooking? Let's say, for example, I was just personally fed up with ticket charges. What could I do about that?
Well, you could give me a call, and you could maybe work with one of our brokers to see if we can get you into a commission structure not having such a thing. The other thing you could do is with that ginormous stock position that you may or may not have, whether it's Merck, Apple, Disney, whatever the case may be. If you have a stock that's one that you've had for a very long time and it's kind of just taken over your portfolio and you can't really sell it because you're going to get killed on taxes and you want to hedge it in some way, give me a call. We work with clients on such matters. 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
I got to say that you have some pretty high-end clientele. I'm impressed by your book.
There you go.
All right, everybody. That's going to do it for the show. On behalf of the Meatball and the Tubmeister, a.k.a. Mr. Bourbon, and, of course, Uncle Mike and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, subscribing. Of course, all you hardcores who join us in the chat, we love you too. Keep those questions coming, and we'll see you on Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.